Hi everybody and welcome back to Mindfully Trading, where I share educational videos about trading the Forex market as well as an insight into my journey as a Forex trader. And I thought I'd share this video with you. It's a little bit of an update based on my trading performance over the last few weeks, together with the main content, which is going to be a backtesting process. So it's going to be an insight into my Forex day trading strategy and how I am building that up and, more importantly, diversifying it to adapt to the changing market cycles. So we will get into the main meat of this video shortly, but if you're new to my channel, welcome. My name is Emily, and as I said, I share educational videos relating to trading Forex. So my personal strategy is a day trading based strategy, and I mainly focus on trading one pair, and that is pound dollar, during the New York session, which starts from about 1:30 GMT to about 4 o'clock GMT, as I am based here in the UK. If you like the sound of learning more about that, make sure that you are subscribed to the channel below. I've also got a range of different resources to help you with your trading journey, including some really useful software that I've been using for many years now, my personal broker and my personal prop firm of choice, so they're all in the description below. And while I mentioned prop firms just before we get into the main video, I just wanted to give you guys an update on the 5%ers if you are looking for a prop firm yourself, if you're looking for some extra capital to trade with to help accelerate your trading growth and to help make some money. The 5%ers have actually unleashed some pretty big news this week. So a couple of weeks ago, they did unleash some big news for the high stakes challenge, where they removed the max trading time to pass the challenge. And this week they have applied that to all of their accounts, which is pretty massive. They offer 3 different programs, as you can see here, for choose funding for your trading. They offer a hyper growth program, so that's pretty much you get started trading live. They offer a high stakes challenge, which is a 2-step program, but they also have a very interesting scaling plan with high stakes, and they also offer the bootcamp program. And now you can do all 3 programs without having any time constraints. So there's no max trading period, which is massive because most prop firms give you a maximum amount of time to pass the challenge, and it's usually limited to a month, which just makes it such a stressful process. So I wanted to just let you guys know, because if you are looking for a prop firm to consider for funding, I definitely check out the 5%ers. They're very cost effective, they offer a lot of support, and now they offer unlimited time to pass. And they're the updates I have for you on this week's news for trading resources. Now let's dive into the main meat of this video, starting with the charts on TradingView. Okay guys, so here I am on my charts on tradingview.com, which is the platform I use for my technical analysis. It's a really great platform. I've got a link below if you want to check them out. And what I'm using in this video is this backtesting feature. So along the top here, we've got bar replay, and it basically allows you to go back in time and remove candlesticks, and then you can unleash them when you're ready. So it's really good for backtesting because it means you can remove market data, and then you can go through different candlesticks and move forwards in time and really test the strategy out and see if its accuracy and its results. So for this test today, I am testing my Forex day trading strategy, the one that I use on a daily basis on pound dollar. But because the last few weeks have been very choppy for pound dollar, it's not been ideal market conditions, and it's limited how many trades I can take. I thought it'd be really great if I could diversify the strategy and apply it to a different asset. So for this test today, I am having a look at its accuracy for USD yen. And I've decided to go back to the first full week of June. So we're going to start on the Monday, the 5th of June. But before I kind of start, I've just done some basic analysis that I would do at the weekend for the following week. And all that means is all these lines you can see on the chart, they may look messy, but they are guides of key levels. So as we can see on the daily, it had been coming down here. Price looks like it's been turning, and we have been making some strong pushes up, making higher lows, higher highs. We broke above that with a little pullback here, and we've come into this orange area, which is a fair value gap. So that's where price gap down here, the wicks, and did not touch from candlestick number 1 and number 3, and it's just made this gap in the market that price is likely to return to, which we have seen here. Now the question is whether or not this fair value gap will act almost like a resistance, and we might get price going into a consolidation here and selling off, or it might break above that, we get a retest and a continuation of this push phase. But either way, from the daily bias, it's clear that we are in this uptrend, this push phase, and I've marked some key levels to help gauge potential trading opportunities for in the week. Now, these horizontal lines that you see here are all market institutional price levels. So we have the main ones at the whole dollar. We have the intermediate ones here, 20 and 0.50 and 0.80 level. It's where institutions and banks tend to have a lot of orders and sit in that can create liquidity in the market. And finally, this box here that I've drawn, that's using this Fibonacci retracement tool from the previous pullback on the daily. So using the bodies only, I go from the low and I drop it at the high here. And that creates these three lines, which are the Fibonacci areas of optimum trade entry, the 0.62%, 70% and 79%. And as you can see, the daily has come back perfectly to that level, and then we've got a really nice uptrend candle forming here, so that could indicate the turn of this little temporary pullback. It might be shifting to the upside. So now that we've just got all these levels in place, I tend to drop to the 4 hour just to get a little bit more detail, but from here it's the same levels. We've got this added blue box, which is a fair value gap from the 4 hourly time frame, but that's enough I need for now to actually go to my time frame where I execute trades and look for trading opportunities, which is on the 5-minute time frame. And I've just zoomed out on the 5-minute time frame because I'm just adding my previous daily low here and the previous daily high, which is up here. That previous daily close on the Friday was that strong bullish candle, and already during the open on the Monday we've already broken above that high, consolidated and pushed higher. Now, this strategy that I use to day trade, I only use this during the New York session, which for me starts at 1:30 GMT. So I'm going to move these candles forwards in time a little bit to just get to the right time of day. So how I would analyze this, let's look at short-term price. So we've made a higher high, higher low. This current day we've broken above that previous high and also the previous daily high, pulled back here, and we've made another high here. So what I'm going to look at is this most recent low. I'm going to use my Fibonacci tool. It's before we had this strong breakout, and I'm going to drop this at the highs up here. And I'm most interested in watching the OTE level for a potential drop down and a potential entry long, which is also just below this institutional price level. It's a minor one, but it's still that one to consider. In fact, I could place an order there because in the middle of that fib level, it's at the fib OTE level. My stop covers this previous daily high and also this whole dollar level, which can act like a nice key level for potential resistance. So it's a nicely placed stop. It's quite a wide stop, but that's okay because my target's at the highs, and that's 1.5R, which is my minimum for a target, also before this institutional price level. So let's just see if this gets triggered in. Okay, so trade number one, just a flow tradition, is a loss. Okay, just make a note of that there. And let's move on to day number two. And I'm just going to stay on this 1 hourly chart just for a moment because you can sort of see price action a little bit more clearly over these larger swings. Now, I'm still long bias because everything from my daily still stands. We were swinging lower here. Price is pushed up, it's broken above these 2 points, so it looks like we are turning, but it looks like it has just pulled back down. In fact, if I use the same Fibonacci from these lows, drop it at the high here, it's come back to this OTE level here. So previous day was probably just too high in entry, a little bit too aggressive, but sometimes you've got to get your feet wet in the market to get into the flow. So we seem to have dropped back down to this level. Let's just shift these previous daily levels around now. So yesterday, the previous daily low is now here and the previous daily high up here. So from this short-term little pullback, this would be the area where the last sellers are. So I'm going to add this line here as well, because we'll be looking for a nice close above that level to see that price is turning again. But again, drop into the 5 minute here, the start of the New York session for the Tuesday. It's broke above this short-term structure, so it looks like it's turning now. We need to find a good place to wait for it to come back to, because I don't want to just buy at the highs. So once again, I'm going to use this fib tool and see if it comes down to this area here, which is in line with that overall larger swing fib. Okay, it's pulled back and then it's broken above that, so I can now just adjust this slightly and use this pullback for the fib, which is also in confluence with these institutional price levels. Right, we're still within my trading time, so I'm going to just adjust this here. We'll use a 15 pip stop just below the lows here, and I'm going to target 1.5, a break of the high, but just before this institutional price level. This price has made another little pullback here, and it's just pushed above the high, and at this institutional level it's made a big bearish candle, so from that I'd probably just cancel this order anyway, because it's already gone to where I was targeting. And it's getting close to the end of my session time, so this would probably be a no trades day for me. So Tuesday's no trades, and I'm going to move this forward in time. Okay, this is looking a lot better for a potential trade, and then it looks like there's also some news at 1:30 releasing, so that can add a bit more volume to the market. Prices come back to this overall fib from the higher time frame. So if you remember, this was the daily fib level. We've pushed above this structure and it's come back to this fib level, which is associated with this push up here. So it's a higher time frame authority, which tends to help support a trade entry for me. So it looks like we could be making double bottom pattern. Let's go to the 5 minute and just see what price does at that New York open in line with news. Okay, so price is opened in New York. It's actually sold off and it's taken out all of this price action. But what I'm interested in is it's gone below these key levels, and then we've got this very strong bullish candle pushing up, bullish engulfing candle, which shows to me that there's momentum there. So I'm going to set an order in this key level area and stop below that candle, and I'm going to aim for 1.5 our target, just past the highs and just before this institutional price level. So let's just see if it triggers me in. There we go. Okay, so that was triggered in about 3:05. Probably could have got some more profit there, but I'm not really testing that side of trade management in this video. I'm just testing the actual strategy flow itself. So trade number 2. And let's move on into Thursday. I mean, this isn't really the best market condition anyway, because look at all that choppiness. I prefer to be trading this when we're breaking these daily highs, and like this would have been really nice trading opportunities. So I'm testing this, but then in a live situation, I don't know whether this would be the market I'd probably be sat out on, looking at another pair that's actually in this trending situation. Which is a lot easier to find trading opportunities when the market's just pushing up in this nice pattern. At the moment, it's just in this choppy consolidation, but we'll go with it because I wanted to start from the first week of June. But I will be making note of that in my backtesting notes, that this is the market phase we're in this week. Is we're in a pullback and it's quite choppy, and it makes it a bit trickier. I've taken a loss. I've had a day with no trades. Sometimes it is easy to just sit out. It's just finding an asset that is in a better suited market phase like this for trades, I find anyway. But let's carry on with this. We've got 2 days left of the week, and let's just see what happens. So it's still looking quite positive for long. We've had this pullback on the daily, we've pushed up, we've come back to retest the fib of this level, and we've got some nice momentum coming up here. So once again, I'm going to just move my daily key levels. So the previous daily high is up here now, and the previous daily low is down here. We've got quite a big range, but it did close strong bullish, which means that for me, if we get a break of this high and then like a retest or something, that could make a nice trade opportunity for a long. Right, just started it into the New York session, and from the open of the day, seemed to just be selling off. We've come down to the daily low. Not really interested in taking shorts because the daily bias, the weekly bias is long for me. So let's see if we get like a break out and a break back in. Now it's out of my session time. So Thursday is no trades. And let's move on into Friday. So this is quite interesting. I thought we might get this break out, break back in. See how it's made this double bottom here? So it's broke below this daily low level and also the whole dollar institutional price level. Sort of tested this area, also pulling in some liquidity from this area on the left. Didn't seem to like it. And USD yen, I mean, it's why it's good to test these pairs because I primarily trade pound dollar, which gives me a lot of nice volume at the New York session, whereas USD yen, obviously it's a yen pair. So during the Asian time, 1 o'clock in the morning, we actually had a lot of volume coming in, and it looks like there was some good trading opportunities there, but I would have been fast asleep. So again, it's something to be aware of. It's why I like to backtest these, because if I feel like a pair is more trouble than it's worth for trading, if it's quite hard work, if it's not really giving the accuracy I'm looking for, I might not add this to my watch list. I might look at a different pair. I might have a look at Euro USD or USD CAD or gold. But I thought I'd start here with USD yen. I'm going to try to aim to do 4 weeks worth of this at least, and just see how it feels, see what the results are, whether it's worth adding this to my list for actually trading in my live account. But right now it's just a testing phase. So let's finish off with Friday. Right, I'm going to leave that key level box in because although we did break below that, we didn't break the low of what we used for that key level box. And we have got a push back in with some momentum. So it might have just dipped down to grab liquidity. It might be retesting this area, and it might still provide a potential opportunity for a long. So let's just move these daily levels down with this. So that's the high and the low from the previous day. Okay, so New York's open, we've had this huge drop down into this fib level once again. And then I'm just watching price, I'm just seeing what it's doing. If it kind of pushes up above these 2 points here, then I think that's enough of a change in behavior to look for long, but until then it's just been quite choppy. Okay, that's got potential. So from the session highs, see how we've come down, and we've kind of been making these little pullbacks, big drop down, but now it's pushed above this with some momentum here. So I'm going to set an order to kind of retest this level here for an entry. I'll set my order at the top of this fib OTE level from this little bit of price action. Stop just at the lows, and I'll just target before this fair value gap on the daily, so just at this high here. But I'm aware it's 20 to 3 on a Friday, so let's see what happens. Alright, well I'm triggered in during the session time. And it seems to be losing its volume because we're coming up to the Friday close. Let's test the theory of if Asian brings in some volume on that Monday morning. There we go. Okay, so we've got another retest during the Asian session about 1 in the morning on the Monday, the 12th of June. And then it went up to my 1.5R target. So we didn't actually hit the target till the Monday of the following week, but I entered into that on the Friday, so I'm going to include that with the week's data. And that's something else I'm going to add to my backtesting notes, is the fact that for this pair, my plans may need to be left overnight to work out, because it's not just USD times I'm trading, it's the yen times, even though I'm asleep, because that's in the middle of the night for me in the UK. That's when a lot of volume comes in for this pair. So trade 3 was a winner. I'm just going to drop to the 1 hour time frame just so I can see the week. Now let's line this up so we can see it from Monday's session time. And that's a very choppy week. Not one I'd probably like to trade in the live markets anyway, because it's just in consolidation, it's hard work. I've had 2 days of no trades, I've had a loss. But even then, we've made 3R, I've lost 1R, so I'm up 2R. So overall, that's still not bad. I've definitely got some notes to make from trading this pair that I'm going to add to my strategy just for this pair, such as leaving the trade to run overnight. And I definitely would continue backtesting because this is only 5 days, 3 trades. I need to have a lot more data, at least 20 trades minimum. I mean, a lot of people prefer to have 50 or even 100 trades, so it's kind of a personal preference. But for me, I'm going to aim to do a month's worth of backtesting and just see how it feels, see what the results are, and then maybe extend that process before I actually apply this to the live market. But I might compare that with another asset such as gold, something completely different, and just see if that provides more reliable opportunities or a higher accuracy rate. But there's a little insight into my backtesting process and what I've been up to when the market's a bit choppy on the pair I currently trade, because I haven't actually had many trading opportunities for pound dollar this week. And just before I wrap up this backtesting video, this is just looking now at current price action for this current week. So I'm recording this on Friday the 7th of July. And this is why I am considering adding another pair to my watch list as it stands anyway, because this week, the week commencing the 3rd of July, has been very slow and quiet for pound dollar. So it's literally just these candles here on the daily and not much has been going on. I've had this red line drawn because I've been waiting for the market to push above that. This is my low from the previous week, and we've kind of just been ranging underneath it. We've had a lot of news releases this week, and I did say in the outlook at the start of the week that it might be quite a slow, choppy week, which seems to be what we've had. I did take one trade this week. I will show you an image for that now. It was a bit of an annoying trade, to be honest. So I took this on the Wednesday, and I basically had a perfect entry in the end. I got triggered in here. I used a very wide stop, as you can see, a 30 pip stop. It's one of the largest stops I use because I was using the larger time frame swing. So it just had to be there because I was out that day. I actually set this early in the morning and I knew I wouldn't have the time to actually monitor the trade, so I needed to give it a little bit more room to move. But as it stands, if I was able to monitor this better, I could have tightened my stop and probably taken a win. But leaving it to run for the day, it did push up, it didn't hit my target, it came down, and I actually had set my stop to break even just before FOMC news release, just to manage my risk, because obviously if the news affected the market, it could have resulted in a loss. So I got out break even on that trade. So I believe I was long around about here, 90. I got out break even, but as it stands, my stop would have held and it would have actually hit my 1.5R target the next morning. But it's always better to manage risk, and in a choppy ranging week, I'd rather be too conservative and not take the win than take unnecessary losers, and that's basically how I've played it this week. But I find that's what trading is very much about, guys. It's about knowing when to trade, knowing when not to trade, about being patient and trusting that the market will always turn back and provide the opportunities. You've just got to know when to sit it out, and that's what I've kind of been doing this week. So I hope you guys have had a great week. Let me know in the comments below, and if you've enjoyed this video, please be sure to like and subscribe, and I will catch you in my next video. Thank you for watching. Bye.